NBFCs like IIFL Finance is down around 20 odd percent for the second straight trading sessions. JM Financial, after the RBI ban on loan against share, is down around 16 odd percent. So the NBFC sector, if you see, has been under pressure. It's L&T Finance also, which is down around 9 odd percent yesterday. Bajaj Finance was declining around 4 odd percent. So what has been the new regulations or the new restrictions that RBI has been putting on NBFCs? And we have Snehi joining us to give us entire detail on what has been the recent restrictions that RBI has put on multiple NBFCs, and how does that look like, and what has been the restrictions in fact.
Well, yes, Amit, absolutely. Let's take a look at the RBI regulations that have been coming in for quite some time now, and RBI has been cracking the whip on a number of banks as well as NBFCs, but it has become more active in doing so since 2022. So let me take you through what the RBI has been doing since then. And Paytm Payments Bank is the first big one that is making it to the list, because on 11th March 2022, for the first time, RBI had prevented Paytm Payment Bank from onboarding any new customers, and this was on the back of material supervisory concerns that were being observed in the bank. Followed by that, the next one to come under scrutiny was M&M Finance on the 22nd of September 2022, and the RBI had prohibited recovery or repossession activity through outsourcing arrangements for M&M Finance, and this also on the back of certain material supervisory concerns that it had observed, especially when it came to its outsourcing activities. Now moving on, the next company under the radar of RBI was Bajaj Finance, because on 15 November 2023, RBI had prohibited Bajaj Finance from sanctioning and disbursal of loans under two of its lending products, Ecom and Insta EMI card, and this was done because Bajaj Finance was not adhering to the extent of provisions of digital lending guidelines by the RBI. There was no issuance of key fact statements to the borrowers, and there were also certain deficiencies that were seen in the key fact statements of digital loans. And well, the next big one that came was Paytm Payments Bank again, because on Jan 31st of this year, a whole host of regulatory sleuths came in from the RBI. They said that no further deposit or credit transactions or top-ups could take place in customer accounts, prepaid instruments, wallets, FASTags, and nodal accounts of 197 communications also had to be shifted out of Paytm Payments Bank, and this was on the back of non-compliance that Paytm Payments Bank had shown with respect to that 11th March notice of the previous year. Now, the latest one that came in on 4th of March was IIFL Finance. We have been talking about this over the last few days, and the order was to seize and desist sanctioning and disbursing gold loans or assigning or securitizing, mainly anything to do with operations when it came to the gold loans portfolio. And well, there were a lot of reasons for this. It was also thought of that there were deviations in assaying and certifying the purity of gold, the weight of gold, the procedure of the auction that the company was following, the mismatch in the difference of the auction amount that was coming up, and the non-adherence to standard auction procedure, and also the charges that were being levied to its customers. And well, the most recent one that came in yesterday was on JM Financial Products. Now, RBI has cracked the whip on this NBFC as well. They're saying that any form of financing against shares or debentures, including the sanction and dispersal of loans against IPO of shares and a subscription to debentures, has to be stopped by the company. Now, loan against securities makes up 8.6% of JM Financial's portfolio, and this has also come in on the back of regulatory infringements that are being done by JM Financial. Company has repeatedly helped a group of its customers bid for various IPO and NCD offerings by using loaned funds. This is what the RBI believes, and credit underwriting has been found to be perfunctory. Financing has been done against a very thin level of margin, so mega margins coming over there as well. And the application for subscription of demat accounts, bank accounts, and all of them were being done via a power of attorney without a master agreement, and the customers had no idea about this, and they had no say in all of this as well. So by chance, the company was able to act as a lender and a borrower as well, and there were also some serious concerns on the governance issues within the company. So while a whole host of regulatory concerns coming in from RBI on all of these NBFCs, majorly since 2022.
Okay, so that was a comprehensive take of what all has been happening and how RBI has been coming in with that regulatory hand on the entire NBFC sector as a whole. But today, of course, there are a couple of brokerages as well. Morgan Stanley as well as Goldman Sachs wrote on the matter. Goldman believes that banks are better placed than the NBFCs given all of this, while Morgan Stanley believes it's not the best to probably paint the entire sector with the same brush. So they do have their thoughts around individual names. But keeping it with IIFL Finance then, and this one is a big exclusive that we have for you on ET Now. The management of IIFL Finance, and we have them right here in the studios earlier today. Mr. A.K. Purwar, the Chairman and Independent Director at IIFL Finance, joined us in the studio, and he said that IIFL Finance will look at complying with most, if not all, of the RBI regulations and requests that they've made by 31st March. Listen into that bite, and then we'll continue the discussion with our guests as well.
If RBI, our regulator, wants the business to move in a certain way, then we would follow RBI instructions. And we am sure and we expect that RBI will ensure that each and every player of the industry follows same, and it becomes a level playing field. We have decided that whatever RBI desires in terms of compliance of regulations, as a company, as a business unit, we will see to it that by 31st March, all, if not most of it, gets complied with. And we are continuously going to engage with RBI to apprise them from time to time on a regular basis as to what kind of remedial action has already taken place and what is going to take. Very clear and very sure that we would see to it within the company that all these issues which have been flagged by RBI are comprehensively addressed by us by 31st March. The damage will definitely be there because almost 30% of our businesses now we are stopping not doing. So damage will be there, but I expect this damage to be temporary. I expect that, well, we are making efforts to come back on rails as fast and as quickly as possible. I expect that maybe 2 months, maybe 3 months, we are able to convince RBI if they can, if they are comfortable with whatever remedial action we have taken, and they carry out a special audit as early and as quickly as possible, then we should be come back on rails very fast.
Right.
But our IT advantage would ensure that the high growth trajectory which our company has followed so far would not be allowed to go away. If we come back on rails quickly, there would be any negative fall by March 25. We will continue to maintain the present market share, hopefully.
Okay, that's interesting.
Well, the NBFC sector now, what to do about it? Let's pose this question to our market guest and market experts today. Kunal Bothra we have in the studio, and Rajesh Agarwal, the head of research of AUM Capital. Rajesh, firstly, my question to you for IIFL Finance specifically. Now, though the management, the board is confident that they will resolve the issue quite in some time, but the street does not expect so. The stock has hit 20% lower circuit for the second consecutive day. What is your view here when it comes to IIFL Finance?
Good morning, Sumitra. Good morning, Anisha. Good morning, Kunal. There has been a lot of apprehension in the recent past. It started with Paytm, then IIFL, yesterday it was JM Finance. One should not forget that NBFC as a sector has become an integral part of the economic growth, if I would say, because banks cannot reach everywhere. Banks are not able to sanction loans or take deposits from sanction loans to unsecured or smaller ticket size customers. So a role of NBFCs would always be there. Yes, RBI has found some discrepancy, and attending to those problems would be a best thing to be for everybody, be it the NBFC company as such, be it the investors like us, or the market investors, or even the client. So whatever is being done by RBI is a very prudent step, and I believe that these companies will take remedial measures, and in the course of time, maybe 1 quarter or 2 quarter down the line, things would be put in place. So yes, I believe that there would be problems. There would be cut in market cap or market share or even their loan book for some time being, for 1 or 2 quarters, but in the longer term, things would be in place. And this kind of opportunity, this kind of scenario is giving a long-term to medium to long-term investors a good opportunity to invest. And one should, I would say, that you should not take the entire sector as being discrepant or something like that. We should not take everybody in the same picture, I would say. One should take case by case basis. Maybe in the larger cap space, we would like to recommend Bajaj Finserv, or in the mid cap space, Poonawalla Finance or Geo Financial. They can be taken as medium to long term bet, and any adverse news in these counters for any whatsoever reason, for the sector, of course, I won't say in these counters, but for the sector, of course, gives an opportunity to accumulate these sort of counters.
Can't paint everything with the same brush, but the overhang is something that might just stay on the entire sector. But within NBFCs, would it be a good strategy perhaps to bottom fish on some of the names? Kunal, any view?
Well, I think except for Bajaj Finance, I doubt that most of the other stocks are actually very close to their oversold nature in terms of indicators or any kind of a major bottom for themselves. So the only good part about Bajaj Finance is that the indicators, the RSI, etc., have entered into the oversold territory. The stock is more than 10% divergent now from its 200-day moving average. So both of these parameters could augur very well for the stock over the near term. At least what we may expect is that the stock may get into a bit of a stability, and that sharp price correction which you've seen since yesterday and specifically over the last 1 month for stocks like Bajaj Finance, I think that could get arrested. So that's the only stock which I believe could now be looked as more of a contra buy from current levels.
Well, that was the NBFC sector for you viewers.